Good afternoon and welcome. My name is Kara Marsh Prophet, and I am the Director of Alumni Engagement and Operations at the University of San Diego for the Office of Alumni Relations. I'm thrilled to have you with us today for our first time homebuyers webinar. Today's session is co-hosted by the USD Alumni Association, Burnham Moore Center for Real Estate, and Knauss School of Business, and will feature 4 outstanding alumni professionals who specialize in residential real estate. A big thank you to Zachary Mansour, new USD alumnus, for the idea to have this program for first-time homebuyers. Without further ado, I'd like to introduce today's moderator, alumnus extraordinaire, and my personal friend and classmate, Seth O'Byrne, who will be introducing our panelists and moderating today's session. Please activate your camera, Seth. Lovely. A few words about Seth while he's settling in. With 22 years of experience in real estate, Seth has a track record of $1.5 billion in sales. His success has earned him HGTV's Hot Properties, the title of Realtor of the Year by SDAR, and a spot among the top 50 most influential Instagrams in real estate. Under Seth's leadership, the O'Byrne team ranks as the #3 medium-sized team in San Diego from Wall Street Journal's Real Trends report. I also have to say that in addition to all of these accolades, Seth happens to be a wonderful human being and a personal friend. Seth, take it away.
Oh, you're so kind. Thank you, Kara. I really appreciate it. For everybody that's on the webinar right now, I want to share with you an interesting thing about how time works. About 5 minutes ago, Kara and I were going to USD together. It could have been 7 minutes ago. And then I blinked my eyes and a quarter century occurred. That's a thing that old people tell young people, by the way, all the time. And now that I'm in my 40s, I can tell you it's true. It's really true how quickly it happens. At the same time, one of the things that I wanted to share with you when it comes to time is time is the one thing that you can bet on. You can bet that from today to 20 years into the future, time is going to happen. And inflation is going to occur, and real estate is going to become more expensive. And one of the easiest things that you can do to change your life forever is buy a piece of real estate. Now, what you buy and where you buy is obviously going to determine how much appreciation and how much equity and wealth you're able to build. But nevertheless, the one thing you can always bet on is for the last 150, really since the beginning of the world itself, but at least the last 150 years that we've been studying real estate, it continues to go up. Sometimes we have down markets, sometimes we have recessions. But by and large, real estate has gone up tremendously. And I will just share with you an anecdote that when I was going to the University of San Diego, you could buy a house in Claremont for $180,000. Now the average home in Claremont is $1.8 million. And so if I had just acquired one house in the middle of USD and maybe not gone to a couple parties, maybe not gone to the first Coachella, and instead investing that money into buying a piece of real estate, I'd be sitting on a $2 million asset today. So that is one of the whys behind real estate. Our panelists today are going to talk about a lot of the whys behind real estate. But I want to share with you as a homeowner myself and someone who's raising my children in my home, the equity appreciation, the write-offs, the tax advantages, while they're very important and a very huge part of my personal financial statement and my own wealth, I think being able to raise children in a home that I own and start a life here with my family, where I live in Rancho Santa Fe, is something that is very emotional to me. It's very personal to me. And I'm really excited that so many young people and people that are a little bit older that are all interested in talking about real estate today. So we're going to start with a panelist. And I'm going to ask some questions of Kimberly Koll, if you can turn on your microphone, and thank you, and your visual. Kimberly and I have done real estate deals together. We've been friends for a long time. We've worked at brokerages together. We've known each other for a long time. I have tremendous respect for Kim. And, there's so many questions I have to ask you, and you have so much wisdom to impart on the people who are watching this. The first question, which was one I know you and I just talked about, which I think is an interesting trend that everyone is talking about now, which is a first-time home buyer 20, 30, 40 years ago, you would think of a different person, a different profile than you think of today. In 2025, Kim, what does a first-time home buyer look like?
A first-time home buyer, actually, the average age now, according to the National Association of Realtors, this just isn't in San Diego, is 38 years old. Now, what we're seeing is there's a lot of things causing this and why that is the new norm. For some of you, I hope that is like, okay, great. Like I have time. I'm not behind because the average age is now 38. And what we're seeing is, there's a delayed shift in priorities. Some individuals are prioritizing travel, experiences, personal growth before home buying. Delayed career progression. We're seeing people, spend longer time through colleges, master degree programs. Just everything seems to be more delayed since when you and I graduated USD, with marriage and just the whole way of how we're living life now. So I hope that is, in perspective. But when I see buyers come through my open house, they're not young buyers right out of college generally. They have been working really hard to climb up their career ladder. Their careers are very important to them, and the priorities are just different now.
Hmm. Well, so Kim, you service the North County market specifically,
Mhm.
right? That's your
Yes, yes,
that's your core focus. Um, North County is very interesting because it's multi-generational, and a lot of people that are buying in North County, I'm sure you find the same thing I see. And Sean, also servicing the North County market, could probably attest to this when we have an opportunity to speak with him. There are parents in North County where their kids grew up in North County, and if they're buying a house in Poway or Encinitas or wherever, there is down payment assistance by the way of parents helping them out.
right.
But wherever you are in San Diego, there's plenty of people that grew up in a family where the parents either want the kids to do it on their own or don't necessarily have the inheritance funds to help someone with their down payment or give them their whole down payment or co-sign on a loan. How do people like that still make a purchase? What other options are out there?
Yeah, I mean, I think there's a lot of creative things going on right now. I've actually recently, this past year, we actually helped 5 families, and it was a different strategy. And here was the strategy. The parents knew that they were going to be downsizing from their larger family home. And they helped the kids buy a condo, knowing that, like, hey, once you start having kids and you're outgrowing this condo, let's switch places. So we're seeing a lot of that where it's families getting more involved in this decision and how this is almost, and we're seeing people build family compounds. I know you probably see that in your area, in Olivenhain and so forth, in Rancho, where it's like, okay, we have this land. How can we use this land? So there's just a lot of more creative ways. There are some down payment assistant programs for different professions, for firefighters, police officers. I will say one of the best things about me marrying my husband in the military was his VA loan benefit. And if you don't want to marry someone in the military, you can also team up with a friend who has that VA benefit and purchase something together where you're helping them put that money down. They're deployed all the time. You guys are building equity together on a great investment. So it's really just thinking outside the box. The first time home buyer programs that we see a lot of advertisements for, it's just like applying for a scholarship. There's only so much that's going to be available, and it is a part-time job in itself because you're constantly having to be on Johnny on the spot when this money is released. And for figures of this money, it's 25,000, 50,000. So it might make more sense to look at other ways to find that money. It is available. There's plenty of options out there. But that just may, be a little bit of the pot towards your down payment.
That's awesome. It's funny. I've recently made a lot of changes in my business where in the last 6 years I've done a lot of real estate development, a lot of flipping, and it was a shift where I added this other engine to my business. And it was funny. I used to always say I can't. Like I can't develop an apartment building. How can I do that? Or I can't really flip a house and get hard money debt and raise equity and syndicate deals. These are all things that seemed like I could sell a zillion houses. I just can't. And it's funny, I saw something on, it was probably Instagram late night, but it was I can't even remember who said it, but it stuck in my head. A powerful moment in your life is when you replace I can't with I'm curious. So I used to say I can't, which like so many people listening to this right now are like, I can't buy my first house in my 20s. I can't come up with the down payment. I can't afford the mortgage. Um, the question that's more interesting is I'm curious, right? I'm curious if I need 100,000 for a down payment, hypothetically, where could I get the money? Like, would my uncle help me? Could my parents help me? Could I get government assistance? Could I partner with someone? Could I work with someone who has a VA loan so we don't need a down payment? It's really interesting how it's just normal human behavior to immediately shut down things that feel impossible and just say it's not possible. But Kim, I'm sure being such an active real estate agent and doing so many deals, you see this. You see young people all the time finding a way to still acquire real estate in San Diego, whether or not the interest rates are higher, the prices are expensive. They're doing it. When you're working with these people, when you're working with a first time home buyer, what are they looking for in you, and what do you think people should be looking for when they're ready to actually hire an advisor?
Right. I mean, they definitely, I recommend looking for, and my degree of separation is like being creative, right? Like thinking outside the box. Any real estate agent can go on the MLS, right? We can all go on the MLS. Any buyer can go on various online webs, platforms and find a property, and that realtor can just show up and open the door. But what I'm talking about is getting really creative with that buyer and thinking, all right, are they renting? What is their rental situation like? I can't tell you how many situations I've had where I actually helped a first-time home buyer buy the place that they were renting. And we just looked for clues, right? Success leaves clues. And the place was falling apart. The landlord didn't want to be a landlord. They inherited the property from their mom, and now they have their property manager, and they didn't want to be a property manager. The landlord wanted to not be a landlord in PB anymore and wanted to be a landlord somewhere else and do a 1031 exchange. So it's really looking, to hire somebody that can really think outside the box, and that has great relationships with other agents, and that has a great reputation. Referrals is how I get most of my business, and you really want to make sure that you're not just finding somebody off the internet. It's through an introduction. It's through, I mean, honestly, the number one thing that matters is they should be a Torero. I just had to say that. But
Love it. It's not true
yeah,
though. It's not true.
yeah. So make sure they're true. But
Make sure
um,
that I love it.
so that was something. And what's really cool is that right now I am mentoring a student, undergrad student, and there are so many undergrad students that are interested in residential real estate. And it's a beautiful thing that we're seeing our industry being elevated by highly educated students from University of San Diego entering our industry. And
Mm.
so education is important. The fact that they're involved in their local boards. Seth, you and I have been very involved in our local boards, have received various awards for our production and what we do in our community. And I think it's really important too that they're in that community, like they're living and breathing. And that's most of my business is where I'm investing in the community, where you see me at Little League with my kids, where you see me like out and about. So I can find these deals off market. I can tell you every single person in my neighborhood, knowing how long they lived in that house and when they're going to be selling, essentially, if it's a house that, um, you know, they inherited or that mom passed away. I'm in Rancho Bernardo, so we have a lot of older folks and so forth, but we have so many younger demographics coming into Rancho Bernardo. So you see a lot of those estate sales. So again, these clues, like how can we help you find something off market or that's going to come on market and get you in there?
I love that. Well, thank you so much for your time. And moving down into South Bay, which is equally large and equally as powerful of a real estate marketplace, Mauricio is also on the call. And Mauricio, thank you for taking the time. I think it's a very interesting marketplace that you've made not only your backyard but your business focus. I'd love to hear lots of things, but maybe you could just broadly overview for us when you say South Bay. What does that include? Where does that start and where does that end? Obviously, we're starting at the border and ending around downtown San Diego.
Yeah, that's about right. I would say, well, first of all, thanks, Seth, for hosting this. Very excited to be here. I would say around the 94 corridor. I mean, obviously, we're realtors. We go where our clients are. Yes, my office, we have a 14,000 square foot building in the heart of Eastlake. We have a team of about 150 agents. So it's
Wow.
definitely a market that's booming. It's still one of the few areas in San Diego that is still considered affordable. It's a big mix. You know, we have a lot of military families. We have a lot of families have ties to the border to Mexico. So it's a very a lovely community.
Well, it's such an impressive business that you run, and I pinch myself, to think that, I could have been 22, 20 years old, 18 years old on this Zoom, hearing from so many people that have accomplished so much in their career. And, Kim's done so much, and Kim and I have done deals together. I know how great she is. Mauricio, you and I haven't done business together, but clearly you've built a very impressive establishment. So I'm counting on you for great advice for young first-time homebuyers. There was a question that you and I were exploring before the Zoom call started around, misconceptions that first-time homebuyers have. What do you think a misconception is? Like, someone listening to this right now has something in their mind. What do you want to dispel as far as myths?
Sure. So I think a lot of people think that I need a down payment or I need great credit, right? Yes, you do need a down payment, but most people are stuck in the mindset that they need a 20% down payment. We all know that's not true. There are ways to acquire property, whether it's with an FHA loan that only requires 3.5% down, VA loan, as Kimberly was mentioning, where you're not required to have a down payment at all. And then if you have good credit, you can go with a conventional loan of just 3 or 5% down. So that's one misconception, right? The other one is that you need great credit. Not the case with FHA and VA. The standards for credit are pretty lenient. I believe you can go down to 580 or 560 on those programs. And then you also the debt to income ratio, meaning the amount of money you bring in monthly versus your expenses, are also a little more lenient. So you could carry a bit more debt. And a lot of people say, "Oh, I want to wait until I pay off these credit cards." It's very important that you work with the right team, because a real estate transaction is not just a realtor, right? We also rely heavily on a good lender, on a good title rep. It's basically a team that will advise you on what's best for you. We will analyze where you are now and where you want to be, and find the path to get there. So those two are some pretty big misconceptions. The other one is not taking action until you're ready to buy. You really need to start six months to a year prior to figure out where you are, because if you wait, then you might be ready to buy and find out that you still have 6 months ahead of you of tweaks that you need to do to your financials.
Yeah, it's interesting because before the call, I know I was sharing that with Kara. My favorite relationships with my best clients that end up buying the best properties, ones that are exactly what they want, totally fit their budget, appear to be, we all know that case where the buyer gets more than they expected. That always comes from the buyers that call us a year before they're even ready to buy. And it's funny because, when you call an agent, right? Like I'd love you to comment on this, but you call an agent, your buyer, and we know this from our side, right? Someone calls us and they're like, "I'm in front of the house. There's a for sale sign. I found you on Zillow or Redfin, or a buddy gave me your name. Can you show up and write an offer in the backyard?" Right? You don't have you don't have trust, right? We're salespeople at that point. We're not an advisor yet. We haven't built the fabric of trust, right? Which is crucial. It's everything, right? But then additionally, someone's just going to, it's their whim. They're buying the most expensive asset they could ever acquire on a whim, which there's not a lot of guardrails to stop them, right? Like in this market, you can buy it's a free market. You can buy whatever you want. What's an ideal relationship when someone calls you? How much time do you want to build them up and educate them? How much time do you want them to be looking at the marketplace they want to buy in? How many homes do you think they need to see? I'm just curious what you think an ideal process is for a buyer.
Great question. So I think it's very important, and you mentioned it, the education piece, right? I think there's a lot of great agents out there, but there's a lot of agents that just go for the sale and don't take the time to educate their clients. What might be good for you might not be good for them. So it's very important to take them over a historic kind of a 30,000 foot view of where the market is. Educate them. You know, they sometimes they don't know what they don't know. I mean, for me, going to buy a car, you know, I hate the process. I don't know it, right? And it's really about going there and sitting in a car and you get excited and you just end up, you know, buying a car, right? If they qualify, you buy it. With real estate, obviously, it's a lot bigger commitment, and there's a lot more to it. I think it's important to have an agent and a team that will educate you on, you know, what is the process going to look like once you write the offer, right? Once you put pen to paper, what is that going to look like? And even before then, you need to be ready because you might end up calling somebody in front of a house. You found the house of your dreams, but you're not ready. You're not pre-approved. You know, you don't qualify for a silly reason that you could have addressed a month prior. So the ideal relationship and what we try to do, what I try to do, and I teach my team is make sure that you're educating your clients, and that'll guarantee that'll increase the chance that they'll stick with you and that they'll make better decisions.
That's awesome. Well, thank you so much for your wisdom. It's been awesome having you on this call, on this webinar. The next person that we have to speak is also a dear friend of mine, Sean. And Sean has been in the business now for, gosh, 15. I mean, you're on your road to 20 years in the business, I believe, right? A proud torero, a phenomenal real estate broker, a flipper, a family man. He's all the things that are near and dear to my heart too. We live very, very close to each other. And Sean, you've built an incredible business. I've seen you and watched you as you've bobbed and weaved and adapted to all the markets as they've shifted and changed. And I look at you as someone I would take advice from it genuinely. And I'm really excited that you're here speaking to people. There's a question that you thought would be an important one to go over. And when I was reading it, oh man, I guess a mixture between regret and excitement for the people listening. Regret because I didn't acquire a lot of real estate in my 20s because I like to party too much. And then excitement because if people take your advice seriously, you could literally change your life by acquiring real estate 1 or 2 decades earlier. And I'm sure everyone on this call could say the same thing. The difference between the people who do well and don't is they started earlier. That's it. That's all it is, right? It's not wait to buy real estate. It's buy real estate and wait. But to that point, Sean, maybe I'll kick off with that question. What are some of the best ways to buy a property when you're in your 20s?
Seth, thanks so much. And thank you guys for putting this all together. This is a great format. And I think there's a lot of people seeking this information, but there aren't enough local avenues to kind of get that information we're looking for. And, I look back at a lot of people, we went to college with. Seth, you and I have a lot of mutual friends as well. Pretty much all the ones that are just uber successful, they just bought a lot of real estate when they were in their 20s. And I think one of the big misconceptions of buying real estate in your 20s is I have to save this big down payment and I have to buy a house. And then it just becomes this expense that I deal with, roofs leaking and that kind of stuff. And I think what you realize the people who've been doing this a really long time is it's, yes, it's that, but there's so many other benefits that are really incredible in real estate. And when I look at like people in their 20s, I kind of joke with young people when they get out of school. I'm like, get your name on title on as many pieces of real estate as possible. I don't care how ugly it is. I don't care how beautiful it is. I don't care if you think, oh my gosh, how am I going to pay for this? Because you know what? As soon as we go do that kind of stuff and we put forth that effort, the world just kind of like figures out a way to make it work. And what I saw as I went through my 20s is I was selling properties to a lot of my friends and, they just kept buying properties and buying properties. And, later on, I started asking really good questions of like, how did you buy all those? Like what, like walk me through that process. And there was a couple of things. I think right out the gate, a lot of us get out of college and we want to go get that job, right? We want to like go get something that seems safe and it seems really cool, and that's fine. But I found a lot of people went and got that job to use that income and tax returns to then go buy real estate. And I looked at the people who really were successful now in their 30s and 40s and what they did in their 20s. A lot of people bought homes with other people, whether it be with their family, with their friends. There's a lot of ways you can buy real estate without being, just the person on there. And some of the people I know who own the most real estate here in San Diego, they have a million partners that are all over town. And some people were active, some people were passive. And I think there's also good ways and bad ways to buy real estate with friends. And I think that's really important. We see that a lot today. But don't be afraid to own real estate with somebody else. Maybe it's your parents, uncle. I think we kind of touched on that earlier, is that, gosh, the best bank I could possibly ask for is probably my parents. And frankly, some people don't have the ability to have parents who can, give them a big, large down payment. But I think the missed opportunity for a lot of people is that, your parents probably don't have a lot of expenses with a house they've owned for 30 years. They probably have a good job. They can help you qualify for loans and they can help you buy properties. And you be the person dealing with it. You take on the adventure of owning that real estate. And I think for people in their 20s, I think the mood is shift. When our parents went and bought homes, it was kind of like, mom and dad went and bought a house and it was like this thing we lived in. And I think a lot of younger people today find that, where the world is and where the market is and where home prices are today, we kind of look at real estate differently. I look at people, yeah, they're buying the home they live in later, right? But they're buying real estate they don't live in earlier. And I think that's probably one of the smartest things to think about when we look at like, where is the opportunity? A lot of real estate you can buy, improve, and resell and still have a job and not have it take over your entire life. And I think I look back in my 20s, I'm like, man, I wish I would have bought everything that I sold to all my friends back in the day because they made millions and millions of dollars years later. And I'm like, man, they were smart. And I was thinking I'd show them the house and be like, it's a little overpriced. And then all of a sudden, years later, I'm like, they were the smartest people I ever met. So I think that's a big part of it, is just kind of understanding that it's okay to buy real estate today because, like you said, Seth, how you opened this up, over the next 10 years, 5 years, whatever, it's probably going to be worth more. And there's so many advantages to owning that real estate today that I think people are kind of underassuming. So, I mean, making sure you're getting financially fit, get good tax returns. It's okay to file taxes. It's okay to pay the government, do the things that you got to do when you're younger so that you don't have to do them later. So I think that's an important aspect that a lot of people just they want to overqualify themselves before they go buy a house, and they miss out on just so much equity as they grow through their 20s, 30s, and sometimes 40s.
Yeah, that's great. It's Sean, man, you and I go so deep and so far back, and our friendship is obviously like, a layer, above, between, within, whatever our professional relationship. Like, it's like, you and I were there together. We were young bucks slugging it out. I remember, just post-recession, and I can't even tell you the number of things I should have bought. And I remember
all the time.
Oh my God. And it's funny. I feel like that's an old real estate war story. I'm sure Mauricio, Kim, Sean, you and I could all just talk about that for hours, but the number of short sales that sold for 200,000, that if we could have just come up with $6,000 for the down payment would have been worth $800,000 now. And the number of tiny little 1-bedroom condos that we could have bought for 90 grand in the recession. And it's funny because, I remember my parents telling me the same thing. I'm now, as an old man with gray hair on the side of my head, telling people on this webinar, 90 grand felt like a lot at the time. 500 grand feels like a lot right now. But a nickel used to be a lot for a hamburger, and $1 used to be more than enough for a haircut. And so, you don't always have to bet on real estate appreciation. You have to ask a more simple question. Will the dollar be worth less? Will inflation continue, right? Will inflation just suddenly stop? And in reality, if you look at all things going up, it's a phenomenal hedge against inflation. And as scared as every one of us real estate advisors are to tell people to bet on inflation, because that's a very, we all want to CYA, right? Like, that's a very dangerous thing to just tell people they can bet on appreciation. The Price-Shiller Index over the last 100 years shows emphatically that yes, there was 2008. Yes, there was 1991 S&L crisis. Yes, we've gone through this weird bump, but prices have continued to increase. And, Sean, Kim, Mauricio, I'd love to hear, as and I'll start with you, Sean. I have I'm going off script here, but an interesting question to ask, and I'll start with me. What was the most normal person that you've sold a home to that sold that home and got the most remarkable check because the house went up in value. I will share with you that I sold a home to a school teacher in Linda Vista when I first started in the business because I sponsored a Pop Warner team and that right around Linda Vista, and that's where my bus benches were and are, and that was, you know, my focus. And we sold a home. I want to say it was $600,000. We just sold that property to an ADU developer for $2.2 million. She put $1.6 million in her bank account just by buying a tiny little 2-bedroom, 1-bathroom, and she could afford it, and she loved it, and she liked it. But at her income and at her lifestyle, selling the one home she bought in her entire life created her retirement. Sean, do you have any great
funny enough, there's a house there's a street called Burton right down the street from USD. And I saw something I sold this house for like $480,000, like right when I got started, to this super nice family that I ended up selling probably 5 or 6 other properties between the whole family. And I see these properties now selling for close to $2 million, you know, to developers who are, you know, as zoning has changed. And I think that kind of goes to one of our other questions, is that looking for opportunity today is that the house you buy may not be the house that we quote unquote call your dream home, but it's a house that will help you get there. And I think that's something that a lot of us wish, you know, I wish I bought that house on Burton. I was like, man, this is a great little house, 2-bedroom, 1-bath, big lot, really nice location. So I think that's, it's something, and it's real proof because you can walk to USD from there. And it was just cool to see that because I saw some new house pop up on the same street for $2 million, and I was like, oh my gosh, this is crazy.
Yeah, well, it's funny too because I don't know if you did this, Sean. I did this, you know, and it's funny because we're all advisors, but I also try to play pretty open with younger people about the thing. Like, don't do what I did. I kept telling myself, the Leo in me, maybe the alpha in me, the person that hadn't had my ego beat up enough to be humble enough, and said, "Oh, I'm just gonna hold out for La Jolla. I'm fine. I don't need that condo in Mission Valley. I'm gonna hold out for Del Mar oceanfront. So once my income goes up, I'll just go buy that." There was a part of my head that said, "Oh, I'm too good for that." But the people that say I'm not too good for anything, I'm gonna get whatever I can get. Those are all the people, right, that are laughing their whole way to the bank and halfway to retirement in their, you know, late 30s now.
Yeah, to finish that topic, because I think we all think about that beautiful property. I had a friend, he worked at one of the, you know, defense contractors, had a pretty like normal, you know, just under 6-figure job out of college. We thought he was, you know, awesome because he did that. And he went and bought a bunch of really dilapidated mobile homes in mobile home parks around San Diego for like $30,000. Yes, that existed not that long ago. And he's selling them all, which may not seem like a lot, but he's selling them all for like $250,000 to $400,000. And he bought all these things for like $25,000, $30,000 just a couple of years ago. And it was easy to qualify for. Some of them, he even had the owner carry mortgages back for him. He bought so many of them because he had maxed out the amount of mortgages he could get. And what seemed like the dumbest idea at the time is now like the smartest thing. Now he's buying shopping centers and buildings and all that kind of stuff. And he still has that same job. He's moved up within the company, but kind of interesting to see like how people look at real estate and how we don't need the oceanfront. That little Mission Valley condo can really do us wonders in the long term.
Yeah, absolutely. Mauricio, I'd love to hear your any good stories of, now that you've been in the business for a long time, anybody who sold a little property to that they did well on.
I'm going to take the opposite. I have a terrible story on somebody that decided not to buy. So we were in escrow on a property for $245,000 in Chula Vista around 2013. Went all the way through, you know, got to the request for repairs. There was some issues with the house, but nothing big. I think we're about $10,000 off. So everybody, the lender, myself, the listing agent, we all decided, hey, let's all pitch in and kind of split it 4 ways, right? The buyer, the seller, listing agent. The buyer did not want to come in with his $2,000, and they killed the deal. And they walked. They kept renting. Prices started climbing, as we all know, 2013, 14, 15. That house just sold for about $850. So, you know, in 11, 12 years, they could have gained, you know, $600,000 in equity more, right? Because they're paying for principal. So Like you said, it's get into a house, figure it out. The most important thing is that you can truly qualify and make the payments. So if you find something that works for you and you're good with the payments, then the time to buy was 20 years ago. The next best time is right now.
I love it. Thank you so much. And Kim, if you want to bring us on home with if you got a great story you'd like to share, I'd love to hear it.
Yeah, recently I just helped a family that they inherited a property. The mother bought a place on Claremont Mesa Boulevard, one of those duplexes that you guys all know of that are selling like hotcakes right now with the ADUs and what they're doing on Claremont Mesa Boulevard. And she didn't want to be a landlord, and she wanted to do a 1031 exchange and help rent out a place to her daughter. Her daughter is going through divorce. And she's like, I need a place out here in Santee so I can be close to my grandkids and so forth. So just she cried the entire time, so grateful that her mother, who came to America with nothing, was able to buy this little duplex. It's like both units were 1 bedroom, 1 bath duplex. I think it was back in the 70s. And I don't remember the cost. I mean, it was less than $100,000 essentially.
Yeah.
And, of course, we had multiple investors who are going to tear it down or add 2 back units. But the beautiful thing is there was actually a couple first-time home buyers, and they were strategic. They were buying that because they were going to live on one side and they were going to rent out the other side. And so I think we always are thinking like we need a condo, like you put yourself in a box of like what your first time place would be. But I'm seeing a lot of people look into buying duplexes, and they may not be in the best area, but that is a way to bring in income and so forth. And the city of San Diego has there's a lot of stuff going on with these ADUs. So there's people getting really creative with that. And then on a personal note, I remember our first place, my husband's active duty and we military used his VA loan. I did not want this place. It was a short sale. It was a total dump. It's in Carmel Mountain Ranch. The guy smoked. It was disgusting. And I did not want it, but I knew heart of hearts that like this was the way we were going to get into the market and buy more real estate, because I saw all of his colleagues, what these guys do, and what a lot of people do is they roll out of that loan into a conventional loan, and that's how they keep buying real estate. So that home now is a home that we actually pull money out to send our kids to school, that I'm probably going to pay for my kids to go to USD one day, and maybe they'll live in one day. So I think you have to look at it like not for right now, but like long term, like generational legacy is what real estate does. And I think that's just the beautiful thing about getting into it. And just that one property in Carmel Mountain Ranch that we bought for $450 has now, appreciated to $1.5 million. It helped us then get into our home now where we're at by pulling some of that equity out, using that as a down payment. And that's what you just keep on doing. And that house too, I mean, there's so many benefits about having now rental from a real estate tax professional. There's so many tax benefits we're not even touching on right now. So I think there's a lot of great stories.
It's wild how normal people can find themselves with $1, $2, $3 million just through owning a house that you live in, right? And it is one of the more exciting things to talk about. Obviously, it's been funny money since the rates dropped in 2020. But if you even took 2020 out of the equation and ran it up to 2019, it's been a phenomenal market. I appreciate you sharing a personal story as well. Kara, I know, Bridget is going to be running a Q&A session. So I'm going to be muting myself here. Bridget, I'd love to pass it off to you. Thank you for volunteering your time today.
Yes, thank you so much, Seth. And I am Bridget Breitenberg. I'm the Assistant Director of Alumni Relations for the Canal School of Business. And I would like to thank our panel and moderator for sharing really your remarkable wisdom and experience. I can't tell you how much I've learned already from the four of you. And I can imagine we're going to need to do a part 2 because we have about 9 questions already submitted. And then we had questions that had been submitted earlier during the registration period. So why don't I just dive in? Seth, I'm wondering if this makes sense if I ask the question and then maybe you assign it to somebody, or
Sure.
you could say maybe, Kim, do you want to take that one, or however you think that we could do this best. But
Sure.
Let me start with this one. What are your thoughts on banks? He put, for example, Wells Fargo advertising 3 to 5% down for first-time home buyers? Is this a good thing to take advantage of? Is it easy for that to lead to buying too much house?
Yeah, having too much of a mortgage. You know, Mauricio, I'd be curious because anytime I'm in the South Bay, I feel like I've done a lot more of the FHA related loans and the 5% down loans. Again, some of that generational stuff we see so much in North County. It's a lot of like inheritance purchases where it's a lot more down payment heavy. I think with the FHA, VA, and limited down payment conventional programs, that's something, Mauricio, you might have a lot of firsthand knowledge of. Is
Yeah,
that something you'd like to answer?
absolutely. So
Okay.
it's all going to be on a case by case basis. You know, what's good for you might not be good for somebody else. So when you talk to your real estate professional, your mortgage professional, they're going to provide you different scenarios, and really what it's all about is having options, right? So if you have, let's say, 15% down, but you have other debt, maybe you have credit card debt, you have a car. So it depends. Is cash flow important to you? You might be able to take, just put 3 or 5% down, amortize that over 30 years, keep some cash flow in your pocket, right? Because obviously that amount that you're financing extra is going to be a lot lower monthly payment than your car or a credit card. And maybe you keep that 10% and you pay the credit card or you pay down the car. Or maybe you come across a house like Kimberly was talking about that needs some repairs. So you keep some money in your pocket and maybe you rehab the home. So it's going to be case by case, but it's definitely always a good idea to leverage as long as the payment makes sense for you.
Thank you,
Awesome.
Mauricio. I think the next question kind of ties into that. How much money on average would I need for a down payment on a modest home in San Diego? I think you all touched on a misnomer is that you need more than what you think, but maybe you could just follow up on that.
Yeah, maybe Sean, you could take that and speak to, what a modest home looks like for today's home buyer. Because a modest home today in 2025 is not a modest, that's a general term, right? What's a modest home today? Maybe we start with that. What's a modest home look like? How much does it typically cost? And then what do you think a down payment would be?
Yeah, so I mean, let's just take, let's use Linda Vista or Claremont area because that seems to be, a pretty well-known area around the USD area. I'm seeing homes, we have 2 for sale in those areas between like 1.1 and 1.3. So typically I'm seeing the buyers, believe it or not, most of the buyers who looked at these homes, they were actually using less than 20% down. I would say on average, I saw people with 10 to 15% down because most people want to do something to the house. People get into a house because they want to make it their own. They want to entertain their friends. They want to have people over. And in a lot of cases, they're buying a home if they can get it a little bit less that needs some renovation or that kind of stuff. I'm finding that most of the success in younger people today is not buying the done house, is maybe buying the house that maybe needs a little bit of work so they can grow into it. But as far as down payments go, I mean, obviously, if we're buying $1 million house, about 10% or $100,000 plus I would budget probably another $10,000 in your basic closing costs to move in would be like a very simple way to think about it. And then just add a few more dollars, but obviously it has a lot to do with the person, right? So what are their goals? Do they invest in the stock market or other things? They may allocate less money per se to the house and maybe do other things. But I would say it's pretty common today. I'm seeing a lot of that 10% down, about 100,000 for $1 million house. Seems like kind of the going rate. I will tell you, if you do the math and you go look at rentals, you're probably going to pay a little bit more to own the house than you would to rent the house. And we've gone in different waves of that over the last couple of years. It was really cheap to own, and then it became cheaper to rent, and then it became cheaper to own again. And we kind of play this chase the market type thing. But I would say in a long run, that you're not continually having higher rent year after year. So I would say that's probably, I would assume 15% more to own the house, maybe 20% more to own the house. But then also they get a lot of tax advantage because of that.
That's really great.
Yeah, thank you, Sean. A few more around kind of that down payment question. This one is, how do I learn more about down payment assistance programs? Where do I even start learning about assistance programs?
Yeah, Kim, I know you had something to say about that, and Mauricio, please chime in as well if you'd like.
Yeah. So, I mean, simple. You can even start it on Google search, down payment assistance programs. And a lot of them are going to be based on the county. So if you're looking to buy in San Francisco, they're going to have a completely different program than in San Diego County. So it's county based a lot of the times. And there's also the San Diego Housing Authority, and they have so much information. Also, a local large big bank branch, Union Bank has programs, Chase Bank has programs. But I think, really where you start is you make the commitment. What we see time and time again are people that waffle, and we all waffled. Well, all of us admit we've all waffled and wish we would have done it sooner. So make that commitment first. That's how you get started. And you can make small monthly commitments. Like, the first thing that I'm going to tell you to do, Sean and Seth and Mauricio, is like, we need you to sit down and meet with a lender. We will help you make that introduction. We will give you a list of like 3 to 5 of our preferred lenders. And, there's different types of lenders. There's lenders that specifically work in this niche of first-time home buyers. There's lenders that are mortgage brokers and they can shop around for different programs. I have a guy at Union Bank who works with people in the medical industry. So that's part of our job as agents, is to matchmake you with the right lender, the right program. And that is the first thing that you want to do to get started. You can go down a dark rabbit hole on the internet with so many different programs and kind of start understanding it. I mean, a lot of them you have to take a home buyer educational course. So there's a lot of prep work into getting these grants. This isn't something that you apply for and then next month you receive it. I would say it's kind of like, doing your taxes or something that's really like, it's going to take some time to get all that information.
Thank you, Kim. This next one, I think you sort of answered the question, what is an FHA loan? And you're sort of suggesting, start with your loan officer. They can walk you through all these options. And I really do appreciate what the 4 of you have been saying around start with a Torero, because, that way you already know you're going to get somebody that's really going to work in your best interest. So that is such great advice. Here's the next question. As I save up for a down payment, is it advised for me to invest that money to help it grow faster, or should I just keep it in a high yield savings account?
Well, I'm not sure maybe I can take that. So, I think that a high yield savings account has been a very great place to put your money and keep your money safely. It's FDIC insured, which obviously is a great advantage. But also it's accessible. One of the things that I find, and I'm sure Sean, Mauricio, and Kim will agree to this, when you start looking for a piece of real estate and you start asking the question, how can I buy? You may get to 80,000 and realize that you found the house that you want, and you're going to find out a way to make it with 80,000. Once you find the house and you're really serious about buying a piece of real estate, you might not wait till you have the whole down payment. You might beg, borrow, steal. You might call your mom and dad and ask them to be a non-occupying co-borrower to help you qualify for the program. There's a lot of different, you might call your friends and say, would you rent out a room? There's a lot of different ways that you can put deals together. And I would say put it in some place that's accessible, and don't lock it away. Oftentimes, whatever you're going to invest in, real estate is either going to match it or beat it. And the one thing that's really different than real estate, this is very important. When Apple is at a certain price, you can't choose to pay less. You pay what Apple is trading at. You are simply riding the market, which is great, by the way. And it's made so many of the billionaires in the world. But the reason that there's more billionaires in real estate is you get to choose the price that you pay for that asset. And I know Sean and I, because we work together and are adjacent in the same marketplace, we buy and flip real estate. We can buy a piece of real estate for $100,000, $200,000, $300,000, $400,000 less than it's worth in today's market. You can make instant equity on deals. And so sometimes your down payment, combined with working with the right agent, combined with buying the ugly duckling that could be worth so much more, can create instant returns in a way that you just couldn't in a stock market. Long run, I say have lots of money in the stock market. It is continued to outpace in some ways, even real estate. But the fact that you can borrow most of the money to buy real estate, you can find other people to help you with the down payment, and the fact that you can choose the price that you pay for that house, I would say keep it accessible so you can strike when you find the right thing.
That's wonderful advice, Seth. I think what I'm hearing from all of you is, don't just hold out for that dream home. Build the process to get there. Here's one that kind of dovetails off what you just said, Seth. Do you think minimizing the down payment as much as possible is a better strategy, even if it results in higher monthly mortgage payments? And it sounds like what you're saying is you can be creative in that area, like you said, renting out a bedroom, getting a little income, but that was the question there.
Yeah, I will just end with something. I'm sure every one of the panelists can share this, but you grow into whatever your payments are. And if your payment is a little uncomfortable in the beginning, guess what? You're part of a long lineage of people who have bought real estate for the last 200 years. The payment has never been comfortable. Buying a piece of real estate has never been easy. You are never going to be comfortable, and you're never going to be ready. So if you're waiting for the time when it feels really easy to buy a piece of real estate, unless you bought the winning lottery ticket, or your company just got acquired, or your parents' company just got acquired, you are never going to be comfortable with the payment. So when it feels crazy and when it feels like you're stretching, I hate to say it, there is a tremendous amount of anxiety associated with buying your first piece of real estate. Just buy it. Just buy it. Like, just buy it. Us agents are so scared to tell people to do that, and yet that is always the best piece of advice. We're scared because we start accepting liability for it. So let me put my license on the line here. Go buy it. You're going to be fine.
Okay, and going off the messy portion of your answer, it says, I mean, what you said could be messy. Here's a question that says, when buying a home with parents, what are some things to keep in mind in terms of setting rules, boundaries, any specific tips? I am worried about it becoming messy.
Sean, you're a family man, and I know you work with your family in real estate. So I think you might be a great person to answer that question.
Yeah, I would say, frankly, probably 65, 70% of the clients I have who are buying that move up house or their first house, they're getting some sort of assistance, not from a program, but from family, parents, grandparents, aunts, uncles, that kind of stuff. And there's several different ways that I see it done. I have a lot of my clientele, they do get a gift from somewhere, somebody. A lot of times it's parents, but I've had grandparents and et cetera. And typically there's a couple different ways. So it's kind of like you could get a gift, and we do have gift exemptions from a tax perspective, but a lot of times they'll just give them the down payment money or buy the house for them or with them and go on title with them. So a lot of times, like, I might be on title with, my uncle who gave me the money to go do that. He's a nice guy. He's relatively sane. He's definitely cheaper than the bank. And he wants to help. And I think that's the misconception, is that family wants to help, right? But it doesn't need to be that technical. A lot of times I recommend there's two things. You can either get a tenants in common agreement, which is an easy way to kind of, let's say Kim or Seth and I want to go buy a house together. That's kind of like your bare basic version. But I kind of look at buying a house with somebody does need a set of rules, almost like a prenup, before you go buy that house, because everything bad that happens never happens while you buy it. It's always a year later. So, just having a really good prenup or understanding with the person you're buying that house with, especially if it's not your parents, I think is a really good way to do it. I've also seen parents be almost the bank. So they're actually lending, they put a note on the property, they create responsibility for the person. And then, the adult child is paying back at a great interest rate, probably close to 2021 interest rates, because the family wants to help. And then also the family can use that as a tax advantage as well. So I think a lot of people, it's just how to approach. I've had many conversations with families of people buying homes and just explaining to them on how they can share the wealth that they've built, a lot of times in real estate, to help them buy that first house, condo, duplex, or rental property, or whatever the case might be. I think, of all the programs that are out there, the Bank of Family is, to me, most of the time the best bank. And I don't look at it as like, you're not, making enough money or powerful enough to do it on your own. the best people on the planet all have partners. And none of them started that zero they said they started with. There's always someone in the background who kind of helped them through it. And I think that's the best gift you could ask for, is the bank of, the people you love.
Can I add
Sean.
something? What we see a lot down here is multi-generational households. So like you said, with an uncle or a parent, a grandparent, it's always good to have an operating agreement, as you mentioned, the set of rules, because what happens if somebody's not there anymore? What happens if somebody wants to sell? They need their money. So all the potential things that could happen, you want to address up front. So that's great. And a lot of people think, oh, well, if I'm going to live with somebody else, another family, maybe you're too cramped in one house. Well, you could get a duplex and you don't need that much more money down. I think FHA for a duplex, it goes up to like 1.3 million. So you could literally get a $1.3 million duplex with as little as 3.5% down.
Thank you, Seth, Kim, Mo, Sean. You guys are the best. And hi, Michelle, one of my classmates.
Oh.
All right. So, and thank you, Bridget, by the way, for facilitating our Q&A. The Alumni Association's mission is to advance and cultivate meaningful and enduring connections between USD, our alumni, and our campus community. This particular program today really is an effort to help create a globally united and connected USD community. And quite frankly, USD loves supporting our alumni-owned and operated businesses. So there's been a lot of conversation today about hiring USD Toreros. You're looking at 4 of them right here. So Seth, Kim, Mo, Sean, please go ahead and put into the chat how you want our fellow Toreros to get a hold of you. The chat is activated for you all to then populate out to our participants. That would be great. Yeah, Kim, you mentioned early on in the program the recommendation to hire Toreros. Seth mentioned it. Bridget mentioned it. As an alumna myself, I always look to hire and work with fellow Toreros. In fact, Seth and I and my husband have worked on multiple real estate transactions here in San Diego, and now my husband and I are raising our 3 boys and future Toreros, of course, in the fabulous neighborhood of Tierra Santa. So what's coming next? I actually have that slide you may have seen earlier when you were coming into the webinar. This right here. So, it actually has email addresses here for all of our panelists. So check those out. Connect with Kim, Sean, Mo, and Seth. We have a lot of opportunities to connect with fellow Toreros in the future. Check these out, our upcoming events. We hope that you'll join us. We are ending 1 minute late. That's not too shabby for a group of very chatty Toreros. So we'll go ahead and wrap it up here. Panelists, please hang on. We'll debrief, but everyone else, go on your merry way. Have a beautiful day, and we'll hope to see you soon.